Morning, Somit. My sense is, this measure has been largely been done to control the growth in the unsecured kind of loan portion of the banks and the NBFCs. And I think it's going to be a short-term sentimental negative. We are seeing today most of the NBFCs, the banks, down in today's trade. I think in the larger banks, I would believe that, it would be SBI, then some smaller banks like RBL Bank, which possibly had a very large percentage of of their loan book on the unsecured side. Typically, if you look at the NBFCs, typically something like Poonawalla Finance or maybe a Bajaj Finance, or typically, smaller NBFCs also will get impacted because this is definitely something which, as at a policy level, is definitely a good measure by the RBI. But definitely, in terms of incremental business growth, is going to be a big kind of negative, at least for the next 3 to 4 months. My sense is that disbursements could get impacted, borrowing rates of NBFCs could get elevated, and that could all get reflected into the profitability numbers of these banks and NBFCs. In fact, AB Capital is also one of the companies which possibly can get impacted because they had a large consumer loan book. So my sense is that some of the entities which would get impacted would obviously like to go down and redraw their lending cost. Obviously, now what kind of borrowing cost they get from the banks, those banks and those NBFCs which are well capitalized, which have got good, credit quality levels, would obviously not, get impacted immediately. But definitely, I think the mood in the market is that RBI wants unsecured loan, book to be controlled, and where these kind of disbursement which was seen in the last 3 to 6 months were quite high. So I think it's a good measure from a macro perspective, but from a business perspective, I think next 2 quarters could be a little softer on margins. So I think you need to take a conscious call as to avoiding such, NBFCs and banks, at least in the very near term. Somit, I think the investor should hold on for the next 12 to 15 months. Very strong order book, a very strong execution track record. And my sense is, the second half of FY24 will be significantly better as compared to the first half. They have a very decent, healthy order book. So that gives a decent kind of visibility to the top line for the next 12 to 18 months. I would suggest the investor should give in a slightly longer time frame of 12 to 15 months and continue to hold on. Better prospects would come in the in the very near term, but at least one should not book out in loss at this kind of time. So Amit, Rajesh Exports, my sense is it's corrected significantly from around 600 650 levels, and I think most importantly their dividend distribution record has been extremely poor. So I think in terms of shareholder returns, nothing great has been given to the shareholders, and plus they operate in a business where the EBITDA margins are hardly about 1% or little under that. So I think in terms of earnings growth or in terms of the growth opportunity, I think there are many other companies, within the jewelry space, if one wants to invest, something like a Kalyan Jewelers or a Titan, where I think, the risk reward could be better. So I think Rajesh Exports should be avoided. Federal Bank has been doing pretty well. They have a healthy CASA ratio and a very good NRI base. Recently, there have been some reports that one of its subsidiaries is going to go public, so there could be some value unlocking for Federal Bank. My sense is that over the next 6 to 12 months, if the investor can hold on, he could expect a price of at least 180 to 190 rupees. So I think, very good prospects, very well positioned in the market, and asset quality continues to be strong. So I think the next 6 to 12 months, you could expect about 175 to 185, a fair value of, that kind of proportion in the next 12 months. No, I think the stock has already moved up, Cheryl, largely because of the fact that Glenmark Life Sciences is going to be sold off for a all cash deal. And that was the trigger point for Glenmark Pharma. I think on the operational side also, Q2 numbers were decent. But I think in terms of the incremental risk reward, I think one could, expect anything say around 800 to 825. I think at those levels, he could think of booking out some partly, and hold on the rest of the quantity for the near term. Yeah, I think, Cheryl, the investor can hold on here. I think they have a large property parcel in Tier 1, Tier 2, Tier 3 markets. And I think looking at the kind of growth in the real estate market, one could expect a decent performance from the company over the next, say, 12 to 15 months. So I think, the investor should give a slightly longer time frame because it's a smaller company, a slightly illiquid counter. So 12 to 15 months, if the investor can hold on, definitely, he can expect a decent risk reward. My guess is MTAR Technology is a very solid company in terms of sectors like defense, nuclear energy. So I think, the propensity of growth is definitely very well laid out. But in the second quarter, the company posted a very disappointing performance. So I think in the very near term, one could expect investor has got at least 18 to 24 months of time frame in mind. Then only I think he should accumulate. In the short term, don't expect any major, fireworks or any major re-rating. But yes, over the next couple of years, if he can hold on, he can definitely expect a decent risk reward. Sumit, as far as IDFC First Bank is concerned, the reverse merger of IDFC with IDFC First Bank has got completed. I would believe that if the investor has at least next 12 to 18 months time frame, then I think IDFC First can definitely give him a very decent risk reward. Not only have the net interest margins improved, the asset quality has also been very strong. The CASA continues to be extremely strong at more than 50%. So I think all said and done, next couple of years, if he can hold on, definitely IDFC First can give him a good upside. And which was the other company, Somit?
For dividend income.
Coal India, I would believe, Somit, I think is a long-term story. I think he's, of course, bought it at a slightly higher level. But if he has a couple of years in mind, then Coal India can be a steady performer. Looking at the kind of appetite in power generation, specifically looking at the kind of demand now which is coming in, I would believe that Coal India can definitely structurally be a very good long-term performer. I think he needs to give in a time frame of at least 12 to 18 months if he wants to get a decent risk reward. I think Cheryl, we can add at the current odd levels. Looking at the fact that Avanti Feeds is a very large supplier of shrimp, feed. More importantly, it's got a very large market in the US market, which after a very long time has normalized now. And most importantly, this company has a debt-free balance sheet, a very good cash flow. So I think if he has a 2-year kind of time perspective, he can definitely add on. I expect better numbers to come in the year FY24 second half and FY25.
Thumbs up coming in from Avinash to add on to Avanti Feeds. But Kunal, do you think some more correction or this level is fine?
I think this level is good enough for you to add the stock price. But then I'm not sure whether you want to park your entire money or major portion of your money over here, because I think at current levels of the market, there are so many large cap names and attractive bets which are also available. So depends on the construct of the portfolio, but I would agree largely with Avinash on Avanti Feeds.
So Avinash, I wanted to know whether do you track the SME space as well, because the next two queries are on SME stocks.
Yeah, I think selectively, Somit, we do track the SME space.
So Zensar IT, have you looked at this company? I believe it's into artificial intelligence. So this viewer has around 1,000 shares bought at an IPO price of 128. He wants to know whether should he hold for long-term or book profits.
So I think Zensar IT, he should hold on. I think we have a research coverage on the note also, Somit. Our sense is that not only the artificial intelligence part of the business, but they have got several government contracts, for the IT development kind of segment, which is going to grow quite exponentially over the next couple of years. More importantly, they are leaders in the training business, especially the corporate training business, which is like a cash cow. So I would believe that if he can hold on for the next 12 to 15 months, he can expect a very decent upside. The stock has corrected from a high peak level, but still I believe the medium-term prospects continue to be good. So continue to hold. Next 12 to 15 months, he could expect a very decent risk reward from the current level. Ola Tech Solutions definitely has good medium to long-term prospects, Somit. But I think at the current level, I think one needs to be a little cautious. If the stock corrects further, and obviously if the valuations get a little more attractive, that would be a good time to enter. If the investor is already holding on this stock, I think he should hold on. Keep a time frame of at least 12 to 18 months.